The Bank of England has just held the base rate at 3.75%. No real surprises here, but there's quite a lot going on in the market right now, and that's worth understanding before you make your next move.
We're here in one of the beautiful show homes at the Brentford Project by Ballymore. We'll walk you through what lenders are actually doing, where buyer demand is heading this summer, and the moves worth making now while the market is steady. So Richard, base rate is obviously number one, but we all know that mortgage pricing moves on a lot more than that. What is actually happening in the mortgage market right now?
So clearly rates are higher than they were as little as 2 months ago. However, they are still lower than they were 2 years ago. There's a lot of volatility in the market, and that's obviously driven by the global situation, UK political situation, and probably further news to come around inflation as well. However, it's also key to point out that some lender behaviour will drive pricing, and that could be based around service, that could be based around appetite. And what's very, very clear at the moment is lenders want to lend, and therefore we may see pricing come down as a drive to get more business through the door, particularly encouraging the purchase market.
Considering the recent base rate announcement, if you were speaking to a first-time buyer today, what would be the single most important bit of advice that you would give them?
Go and get advice. Go and speak to an advisor. What we're seeing is better rates than people expect, higher borrowing capacity than people expect. Virtually every lender in the market will lend or potentially lend a customer more money than they would as little as a year ago.
We also speak to a lot of buyers who are waiting for the right market, or we have a lot of buyers that are waiting potentially for the right rate to come to the market, as an example. In a market like London, can that cost them?
Yeah, absolutely. The hardest part of buying a house or a home is finding the home. And people who sort of put off waiting for the right rate climate to come along actually risk greater competition and therefore potentially missing out on the right home.
What are the other variables beyond just what rate it is that you're paying that maybe buyers don't know about?
Yeah, so I think a lot of that comes down to the structure that you approach it with. So very few people are buying perfection and want to go and spend money on a home. And then come into the scenario thinking, I've got 25% deposit, I need to put that down. In actual fact, they may be better off putting down 15% deposit, getting a rate that's not actually that much different, but then having the money in their pockets to be able to do the work that they want to the home, to make it the great place that they've bought, the great place that they want to live for the next period of time. When we talk about affordability, a lot of people look at what that means for how much you can borrow. Probably the key thing is how much you can actually afford to pay each month. And for many lenders now, they will actually allow mortgage terms to go beyond 70 because a lot of people are expected to work beyond 70. And therefore, having a repayment mortgage that's over a longer term could stretch out the monthly payments, make them cheaper in that first period of time. Beyond that, there's then interest only. This is becoming widely more acceptable again.
My first mortgage was interest only.
Driven by the government and in turn the regulator. And therefore more lenders are offering more of these products. And I think the key point to make here is interest only is not a means to not pay your mortgage. It's more about setting the monthly payment that is better attuned to your budget and then paying it off when suits you.
One other question I have is we often have a lot of buyers that have a relationship with their bank. Okay, and they sometimes think, I've got a relationship with my bank, therefore the best rate and the best service I'm going to get is direct via the bank, when quite often that isn't the case. And a lot of banks actually prefer to go via an intermediary. Why is that?
Well, look, mortgage intermediary provides a great service. And what they do best, it's not all about rate. What a mortgage advisor then can do is really assess both the sort of material facts that drive what someone can borrow and the more aspirational points around what product, what lender is suitable for them. And that's not always going to be your same bank. Beyond that, it's then about the service. Getting a mortgage is not buying a home. Getting a mortgage gets you from application to offer. And what good brokers will do is they will act for the buyer and they will help them see them from putting in an offer on a property, getting the mortgage application through, but then guiding them all the way through up until the point of completion and when they're in the home, and then also looking at things beyond, how to protect their income should the worst happen.
Yeah, okay.
There's a lot more than just what's the best rate. Thinking about buyers, when they're nervous about rates, what does that change about how a home needs to be priced and presented from an estate agent's perspective?
Yeah, I'll speak about presentation first. I mean, as you can see where we are here at the moment, presentation is so important to a buyer's first impressions when they come into a property. So trying to present your property in its best light possible. Pricing is a strategy, okay? Pricing can be determined on how long it takes or how long you want to take to move. Where are you in your own search, okay? But again, the most important thing is, are you getting viewings through the door? What is the feedback from those viewings? Are you finding that your buyers are loving the property, but you're just not getting that bite? In which case, do you need to look at the comparables about what's selling in the market? Speak to your estate agent, ask them, what is it other buyers are seeing, or what other properties are my buyers seeing that means they're not going for mine? And that may mean you have to make a price adjustment. But again, don't panic, don't make any rash decisions, speak regularly with your estate agent and look at the evidence in the market.
Do you think that there's opportunity in the market for buyers today?
It's a bit of a double-edged sword. When there's opportunity in the market, it often comes with a lack of confidence, okay? And buyers will often follow confidence, okay? Which often means a lot of buyers can miss an incredible buying opportunity. We've seen rate volatility this year, okay? And so a lot of buyers think that must mean that it's a terrible market to be buying in. But actually what rate volatility means is you might get some more price sensitivity from sellers who want to move. Therefore, they do drop their prices. They want to get on with their lives. They're seeing their onward move has reduced their price. So actually that rate increase can be discounted by the fact that the property that may have been at 550 earlier on in the year might now be marketed at 500,000, and the opportunity sits right there as opposed to actually their monthly mortgage payments itself, if that makes sense.
No, absolutely. And you may actually find that people are able to make a bigger step if they're buying a first home or making a move than they were in the not too distant past.
Totally. I mean, we talk about the trading gap all the time, okay? And the trading gap is, look, don't always focus on what your absolute sales price is. I know we always want to try and be breaking records for you, our client, the seller, when we're selling your property. But actually, the value in the move can quite often be what you can discount on your onward move. So we would always encourage sellers who are on the market that aren't seeing interest and nervous about reducing their price, go, listen, don't worry too much about that yet. Let's see if we can get some offers on the table and then use those offers. And you may never know what price you may be able to get on your onward move. And if we can get it at a reduced price on your property and then you negotiate that on your onward and the move happens, your goal is achieved. Every time the bank meets, the headlines go a bit mad. A hold, cut or hike all make for good telly, but it's only a small part of the picture when you're deciding where to live. The clients we've worked with for years don't ring us in a panic the morning of an announcement. They ring us when something changes for them. A new job, a baby on the way, kids leaving home. That's when the market matters.
And it's the same in the mortgage market. Rates will keep moving, both ways, and trying to time the bottom rarely works out the way people hope. What works for borrowers is starting the conversation with an advisor early, sharing goals and being flexible. Your life keeps moving too, and it's your advisor's job to ensure the finances fit it.
So give your Foxtons agent a ring, have a chat with your Alexander Hall advisor. We've been doing this a long time, and the people we look after are getting on with their next chapter. We'd love to help you do the same.